Boston. That's DAV5K.Boston.
Hi, everyone. I'm Mark Rosenthal. Here's what's happening on this Monday. A mixture of sun and clouds. It'll be mild. Temperatures not far from 40. And then overnight, partly cloudy, turning colder, becoming windy late at night. Temperatures by morning and low in mid-20s. And tomorrow, variable clouds. It could be a late-day flurry or a snow squall. Temperatures near freezing, but temperatures fall quickly by dark. And Wednesday, a mixture of sun clouds, windy, cold weather. On the Money Matters Radio Network, I'm Mark Rosenthal.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hey everyone, it's Ted from Consumer Cellular, the guy in the orange sweater, and this is your wake-up call. If you're paying too much for wireless service, you don't have to keep having that nightmare. Consumer Cellular has the same fast, reliable coverage as the leading carriers for less. And for a limited time, new customers receive their second month free when they sign up and use promo code SECONDFREE by January 26th. So why keep spending more than you have to? Seriously, wake up and call 1-888-FREEDOM or visit consumercellular.com.
Taxes, fees, and other third-party charges will apply. See website for additional detail.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit DAV5K.Boston and make a donation today. That's DAV5K.Boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 7 Common Financial Frauds and Scams. Mike, the big one that people tend to focus on, and it's an important one, is identity theft. Let's first define what identity theft is.
Yeah, well, I think it's also fairly misunderstood because some people have a vision of, a big criminal ripping off your identity, and it's not usually done that way. But identity theft is using someone's social security number or, identifying their bank account numbers to be able to imitate them and therefore gain access to their funds in some way, shape, or form.
And there are some things that people can start to do in order to potentially protect themselves against identity theft, but it's a hard one because there's so many different potential entry points.
Well, and there's been so many data breaches too, right? If you work for the federal government, your information's been breached. If you have ever had anything through Experian, you've been breached at some point in the past. And so if somebody really wants to buy your social security number, it's unfortunately not terribly difficult to do. But obviously storing documents in a safe place so they can't be misplaced, being careful and not using things like public Wi-Fi is a big one to avoid using. And then skimming credit card information is very common these days. And so to the extent you're able to not swipe a credit card, instead use the pay to touch, that can help things along when it comes to avoiding this.
Our guide is titled The 7 Common Financial Frauds and Scams, and the way to request it is by calling 800-393-4001. Again, it's the 7 Common Financial Frauds and Scams, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you, kicking off what is going to be the busiest week of the year. I know, obviously, we had a jobs report last week, and that was certainly important. It's not to poo-poo it or anything. Obviously, given the market activity that we saw on Friday, clearly it means something. But this week, we've got economic data pretty much every day but today. Tomorrow, we get producer price index data coming out at 8:30 a.m. Wednesday, we're going to be getting consumer price index, so the CPI comes out on Wednesday. Some smaller reports too, but I'm not going to go through all of those. Thursday, retail sales and jobless claims, and Friday we get building permits and housing starts. So it is a really quite a busy week for us as we get things started here. But I think before we jump forward to this week, we've got to look back a little bit at what happened on Friday because, hey, we had a really good jobs report, 256,000 jobs created. The unemployment rate dropped from 4.2 to 4.1%. And yet all three major U.S. indices off anywhere from about 1.5 to 1.75%. What gives, Michael? What gives?
What gives is what we have been warning and talking about for a few weeks now, which is we're back to a market of bad news is good news and good news is bad news, seems to be the conclusion here as far as I can tell. And markets are much more interested in where rates are going, at least temporarily, than they are on how much growth this economy is going to present and what it means for consumers. And I think Friday, as you mentioned, was the perfect example of that, but we've seen a few others as well. And the overall result here, right? I mean, what's happened now is the 10-year U.S. Treasury yield has climbed to over 4.75%. You've had the average 30-year fixed rate mortgage climbing to 7.25%. And then you're again left with an incoming Trump administration who's looking at an economy that is healthy and, is showing some signs of rebound after, some weakness in the second half of last year. But a incoming Trump administration that has a number of key policy priorities, none of which are likely to bring down borrowing costs come 2025, so far as I can tell.
Yeah, and I think that when we talk about, the growth rate of the economy, I think the read that I get on this in terms of, hey, why are stocks selling off there is, look, you've got bond rates moving up, and I think that equity owners are concerned that as rates move up, it potentially slows the economy, and that in turn then impacts all of the projected earnings growth and so on and so forth. So it's, hey, rates move up, and can stocks stomach higher rates? Now, there have been times, most notably you take a look at 2022, where investors were saying, no, they're not going to be able to stomach that. And in reality, what we saw was, we did see some earnings declines across, multiple parts of the economy. It was something where higher rates absolutely impacted companies' ability to make money. In 2023, remember, the end of 23, we saw the 10-year Treasury rise to 5% at one point, and stocks sold off a little bit, but not that much. And so the read was, there was some concern there, but not as much as what we saw in 2022, because in some situations, Mike, higher rates can reflect overall health in the economy if the concern for inflation is there and if the growth is there to support it. This is more a question, I think, of will those higher rates bite the economy in such a way that the growth that's projected over the next 12 to 18 months doesn't materialize.
Right. And to be clear, I mean, the sell-off that we are seeing, everyone's making a big deal of because it's January and God knows we're going to see the pieces. Watch out, because this is what happens when the markets go down in January.
We haven't seen them yet.
I know, but they're coming. Just give it time, Chuck. But, ultimately, what have we seen here? A 5% sell-off thereabouts from peaks back in beginning of December.
Yeah, that ballpark.
So somewhere in that range. So I don't think you can categorize it as a 2022 reaction to interest rates to this point. But yeah, look, it's an all-important question, and the readings we will be getting on inflation. While this week's, it would, it'd be quite surprising if we saw a significant miss on inflation based on data that we already have. But those will be pretty important readings here on the state of the economy, because we are seeing, once again, a relatively tight labor market as we head into 2025.
And so we do get a piece here today, and this one is kind of the opposite of what we got at this time last year. Remember, it was 4 days into last year, and we were getting the pieces you referenced where, well, January's not starting well, and that means the whole year's gonna be bad. This time, and again, I haven't read like every financial news piece everywhere. I'm sure if you go to like certain corners of the internet, there's some of that going on. But this you have from Barron's. The headline is, "The market is overreacting. Don't lose your head." Question, Mike, because this...
We probably need to all lose our heads now if Barron's is saying don't.
Well, a couple things. The first one is, this begs the question, not raises it, is the market actually overreacting?
We just talked about a 5% market swing from December 4th on interest rates that have moved up. Let me see. How much has the 10-year yield
10 years up over
since December 4th?
Well, I'll go even back further. I know it's been since December 4th, as you referenced, but the 10 years up about 1.15% overall since December 4th. It is up about 0.5%. And so
doesn't seem like a gross overreaction to me.
No, like it doesn't seem like this huge overreaction. It seems completely in line. If the market had sold off, 35%, then I think you'd be like, well, the market's overreacted. Yields have moved up, and there's been some concerns about this and that, and a 5% sell-off is not crazy. I mean, this to me, the bothersome point here is it makes the lack of volatility that we saw last year seem as if, that's how things are supposed to be, when really you're supposed to see some ups and downs in equity markets. That's the nature of the beast. Forgive me for being a broken record, but it's a feature, not a bug. This is not a market overreacting. This is a market that is reacting appropriately, in my opinion, and quite honestly is evidence that we have properly functioning markets, because they don't just go up all the time.
Yeah. The other piece that I think kind of got missed, at least in the title of one of the pieces that we had today, the first story that we had covered, U.S. stocks got clobbered Friday despite a blockbuster jobs report. No, stocks got clobbered on Friday, if that's what you want to describe it as, because of, not in spite of, the blockbuster jobs report. That was a causal effect. Had that been a net loss of jobs in the month of December, I do genuinely believe markets might have gone up on that news, because investors right now, per the many stories that we're reading, and per market reaction too, don't seem immensely concerned about recession. They don't seem intensely concerned about a downturn. And quite frankly, I don't think they should be, only because in the short term, if we see that type of slowdown, I think an incoming Trump administration has a set of tools they would love to pull out on that type of economy.
Sure. Yeah, we've talked about this, that in that situation, then you do have something where you say, okay, we can cut taxes this way, and there's something that makes sense there. That doesn't make sense, necessarily in a hotter economy with higher inflation than we saw during the first Trump term. So, again, I think that in terms of where this market is right now, it remains one that is steeply priced. It remains one that is pricing in an awful lot of growth. And even though markets have come in a little bit, if there are further hiccups, you would expect markets to chop around as well. Now, I think there's probably a case to be made in terms of like what this piece is, maybe trying to say, but I don't think quite gets there, which is, hey, if you're a long-term investor who doesn't, study this stuff day in and day out, yeah, you probably don't need to pay as much attention to this, what's going on in markets. A 5% dip in markets is something that, happens 2 or 3 times a year normally. So if you want to make the case of, hey, this is normal, don't freak out if you're an equity investor, okay, that's a reasonable case. But like, the market is overreacting. No, it's not. The market's not overreacting.
That's probably a disclosure that we need to put on just about 90% of the stories that we cover on this program. Right? Like, we need to really call attention to those ones where we say, oh, even as a long-term investor, you need to understand what the heck's going on here. And we do. But yeah, pieces like this are meant to grab a headline and not meant to really portray a whole lot of information for the average investor.
Let's take a quick break here. When we come back, we just talked about what's going on in equity markets. What's going on with the bondaroonies? We'll fill you in on that after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. The average monthly cost for a private room in New England could double by 2040. So if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. It'll help you understand how to protect your assets and allow you to enjoy your later years. An unexpected nursing home stay could significantly reduce your wealth and prosperity. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. Don't put off today what you might really need to do tomorrow. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As technology continues to evolve, financial frauds and scams are becoming more regular and pose a serious threat to your finances. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and understanding how to identify these scams can reduce your risk of becoming a victim. Our new guide is called 7 Common Financial Frauds and Scams, where we offer information that may help you become more aware of these issues and allow you to take the necessary precautions to avoid a big problem. From identity theft to Ponzi schemes and ransom attacks, the new guide will focus your attention on practical tips to protect your financial health. Call 800-393-4001 and request your free guide today. That number again is 800-393-4001 and ask for your free copy of 7 Common Financial Frauds and Scams at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. By making a donation, you can support the Veteran Advancement Program, which offers permanent and transitional affordable housing to veterans and their dependents. The DAV of Massachusetts is the only DAV department in the country to lead a veterans housing initiative for single vets and those with families. Visit dav5k.boston to make a donation today. And make note of this year's 5K to be held on Saturday, November 8th. That's dav5k.boston.
Global bond tantrum is a wrenching and worrisome start to new year. That's the headline from Bloomberg. And I do think there's something just that's, worth talking about here in a couple respects. The first is that word global, where I know that so often we are just insulated in hey, what does this mean for like my town or my city or my state or my country? Where country-wise, we look at the U.S. and we say, hey, yields are going up in the U.S. Is this like something that's related to, us specifically? And the answer, in my opinion, is no, because you do have bond yields across the globe that are moving up, and it's not something where you look at the UK and say, hey, the UK is impacted by, tax rates in the U.S. And how, the U.S. deficit looks. It's not something where you look at Japan and say something similar. So I think there is something that's afoot here, but it is clearly not a U.S.-only problem, and the U.S. is not the only country that exists. Every other country has agency as well. Like it's not just what we do. But I do think the interesting piece on this is, look, you do have this sell-off that's been happening in bonds across the globe. What is the reason for it? How much further can it go? And when do we get to a point where markets don't just sag a little bit, but they start, breaking in different areas?
Yeah, and I guess importantly, has it been overdone, which none of us will know until it's in the rearview mirror. But there's one quote in here that I was interested in your take on, Chuck, because, quote, shift upward in yields is part of a natural realignment after years of a near zero rate environment following the emergency measures taken after the financial crisis and then COVID. And far too often, I feel like there's pieces written like this where it attributes a very short-term rise in yields, which is what we've seen over the last, 3 months or so, to some long-term trend. And I just have a really tough time saying with any sort of definitive opinion on this that, oh, yeah, we saw the interest rate on the 10-year yield move, a full percentage point over the last 90 days because we're just normalizing out of the great financial crisis and COVID. Like, I don't think so. Can you make an argument that we won't ever see 3% mortgage rates and those were a result of COVID and the Great Recession? Sure. But attributing this most recent rise to that, I just don't see the connection.
No, it's something where I don't know why this happens, but we often like to attribute something that's happening, in the short term. We like to attribute that to, some broader theme that's playing out when sometimes it's just completely random noise. Mike, I know you're not a basketball, baseball, or football guy, so let's stick with hockey. What's the most goals you've scored in a game?
Well, me personally?
Yeah, you. No, you personally.
I've once gotten a hat trick, but one time.
Okay, so Mike Armstrong scores a hat trick. Do you remember the date that you scored that hat trick?
I do not.
Oh, come on, you're only hat trick and you don't know the date. So
yeah.
Mike scores a hat trick, and the people following Mike's prospect career for the NHL, they look at that and they say, well, this is all part of his growth and development, and we can expect a whole lot more of this? Or is it just, hey, Mike Schatz found the open net on that night, and that was just kind of how it worked. So to bring this back,
it was more attributable to the fact that I was playing against 10-year-olds,
which is also great. Like, you got to play with people your height level. I understand, but
it's important.
It's something where, to bring it back to the bond market, look, just because you have a short-term move here, it doesn't mean that you're seeing this permanent, not even permanent, this path to normalization after COVID.
Right.
As we talked about, last week, hey, all the people that were freaking out about, the U.S. deficit when the 10-year ran up to 5% in 2023.
That's where I was going to go. It rings very similar to those same arguments as, oh, yeah, all of a sudden the bond market's paying attention to deficits, or all of a sudden we're returning to the normal of post-COVID and Great Recession. It's like, well, probably not. It seems like an odd time to choose just now to readjust to the normal economy. So, yeah, you could convince me that investors are being overly pessimistic when it comes to inflation and selling their bonds really with a heavy push here. But if you're going to try and make a case that it's some, big macro shift, I think you're just cherry picking data points to fit your argument.
Yeah, I mean, if you were to, over the next 3 to 4 months, see a slowdown in growth in the United States, just that, finally materializes after 2 years of talking about it, and the 10-year goes back to 3.5, do we suddenly sit here and say, well, now, the market is pricing in the lower growth rate that's expected in the U.S. in the long... No, like you can't extrapolate that into something bigger. Sometimes it's just what's going on short term, and sometimes it might just be not even stuff that's related to the economy. I think sometimes people don't realize that there's stuff that happens in markets that is purely structural as a result of how people and companies need to access them. At the end of the month, you always see a bunch of rebalancing flows, particularly in foreign exchange, as companies figure out, hey, what did we bring in this month? How much do we need to hold in different currencies? And you just move stuff to where it needs to go. And if you were to wake up after one of those days and be like, oh, gee, what happened with, the pound relative to the U.S.? Is this something bigger? No, like sometimes it's just that TJ Maxx sold a bunch of, Japanese stuff into the U.S., and so they need to, figure out how to make, their yens and dollars work together. It's like it's oftentimes no more than that going on, and it doesn't need to be some broader thing or this big theme. Sometimes it's just, hey, it's corporate month end, and this stuff's happening. And so I find it, bothersome when we have to make everything into like some bigger theme. Sometimes it's just, hey, some dudes needed to sell some stuff today, and that's what happened. Or this month, or this week. Now, sometimes these things can become, bigger themes, but everyone wants to be first to saying it, but there's no one keeps the scoreboard of, who's right and who's wrong on this stuff.
No, we only reward those who are temporarily right.
Quick break. When we come back, we've got Wall Street Watch, and then let's talk about fake job postings after that.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Coming off a losing week where all three major averages shed about 2% on the heels of surging bond yields, markets today are in mixed territory as investors await the kickoff to fourth quarter earnings season in addition to an inflation reading on Wednesday. Right now, the Dow is up by 1/3% or 132 points. S&P 500 is down by about 2/3% or 36 points. And the NASDAQ is down 1 1/3% or 260 points. Russell 2000 down by 2/3% as well. 10-year Treasury yield up by 1 basis point, now at 4.79%, and crude oil up 1 2/3%, trading at $77.81 a barrel. Moderna shares sinking 22% after the biotech company lowered its 2025 sales guidance by about $1 billion. As it continues to cut costs, Moderna now expects 2025 revenue to come in between $1.5 and $2.5 billion, most of which will come in the second half of the year. In a release, the company said the majority of those sales will come from its COVID shot and newly launched vaccine for RSV. Meanwhile, the U.S. imposed caps on how many advanced AI chips can be exported to certain countries, overriding NVIDIA's objections. NVIDIA shares down by about 3%, while other chip makers are also seeing losses on the day. Elsewhere, several crypto stocks, including Coinbase and MicroStrategy, are seeing losses as the price of Bitcoin slid further to just north of $90,000. Coinbase down by 5%, while MicroStrategy shares down by 3%. Over to the retail sector, where Macy's provided disappointing fourth quarter guidance while its comparable store sales are expected to be roughly flat. That stock down by 6%. Abercrombie & Fitch shares sinking by 18% despite the retailer raising its outlook for the fourth quarter on strong holiday sales expectations. The company now expects fourth quarter net sales to grow between 7 and 8% compared with previous guidance of 5 to 7% growth. Those holiday expectations are still lower than the year-ago period, however, suggesting a slowdown in growth. And Lululemon hiked its revenue and profit guidance for the fourth quarter. However, that stock down by about 0.33%. I'm Tucker Silva, and that's Wall Street Watch.
Mike, what's a fake job posting?
It's something where there's a number of different reasons that companies are doing it, but it's a job posting that a company generally doesn't have any real intent to hire a person on. And there's a few different reasons that companies seem to be doing this. It's all kind of conjecture because no company is going to admit that they have a posting out there that they never intend to hire for. But some of the reasons given seem to be that they just keep the job posting up to make it seem like they are in still growth mode, which is just super crappy. And insinuate something about just how poor the company's growth trajectory actually might be. Others would be, hey, we're just going to keep this posting open because we're always on the look for this type of role, and we're just waiting for some exceptional candidate to come around that's one in a million. That one I still have an issue with, but certainly less of one than just a fake one. But the other job postings that are serious out there are scams. This article doesn't talk about that at length, but I think there are a number of different people who have gotten text messages about fake jobs. That's one thing, but they do still exist on job boards where they're attempting to get you to apply to a job that is either something that is not what it seems or is a genuine scam to try and get you to turn over information. So it can run the gambit, Chuck.
And so the big thing on this is from a piece in the Wall Street Journal, is that it becomes frustrating for individuals who are applying for these jobs where they're like, oh, like this sounds really, interesting, but the company has no intention of filling that job actually. And it's not to say that this is like all that you see, but it's something that, hey, if you're out there trying to get a job and you're spending, time and effort working on, putting together cover letters and this and that, and hey, you're sending out, dozens of these. Yeah, the fact that, 1 out of every 5 might be for a position that is not actually being hired for is kind of a waste of your time. Now, that's kind of the nature of the beast in the job market. I mean, it's for every one of those. I'm sure there are stories from employers about how, hey, we scheduled an interview with candidate X, and when the time came, they didn't show up for their interview. So this is not those horrible employers, how could they do this? It's much more, this stuff is always present in the job market to a certain extent, and it's kind of the cost of doing business. The other thing that I have a question on is, like, we don't have any historical data on this. So this was figured out by a company called Greenhouse.
Sure.
Greenhouse did not exist, to the best of my knowledge, back in 1970. So we don't have any information on, like, some kind of longitudinal study like, hey, has this problem been getting worse? Has it been getting better? Or is it about the same? It's much more, this is what we're seeing right now. And there's probably always some of this, just like there probably always are some interviewees that don't show up for their interview, and this stuff gets baked into the system, but it does make for a frustrating process, I think is something that's worthwhile to note.
Well, and my conclusion is, much like other types of, again, I don't want to describe this as necessarily a scam, but much like many other types of things that are frustrating in this sense, the ability for a company to post a job has gotten orders of magnitude cheaper over the years. So therefore, the ability for fake job posts to exist was probably a lot, at least financially, more burdensome back in the 1970s, because you generally probably wouldn't print an ad in a newspaper for a job that you weren't actually intending to hire for.
Sorry, go ahead.
No, you're fine.
My mom was a college counselor while she worked. She helped to get people placed into different schools and this and that. And one of the things that by the end of her career that she said was, look, it's great that they have like this common application that allows you to submit, one set of, paperwork to different schools with a couple changes here and there. But honestly, it's made it so easy to apply to schools that instead of, actually having to like filter down your list and do the work, it became just, I'm going to apply everywhere and I'm applying to 25 schools instead of, maybe 7 or 8 that I should. And you see the same thing, like it's kind of the same type of thing where hey, if it's so easy for someone to post a job now, but also if it's so easy to just, click on LinkedIn and be like, here's my resume. Like you don't have to think about it in either one of those situations. Are you actually improving the hiring process, or have you just pretended to make it easier? But now, as an example, if you are let's say that you are a company that's hiring, well, gee, because it's so easy to post on LinkedIn, you get 200 resumes. How do you sort through that? Well, now you're you're like, well, we got to hire like someone to do that, or we've got to have AI do that, and maybe the AI misses something that a human would, and now you've actually missed out on your good candidate. Like, are you actually building a better hiring process? And how often do HR departments go through those reviews to be like, are we actually doing this better, or does it just feel good because like this is what everyone else is doing?
I recently saw a story from Reddit, so take it with a grain of salt as to whether or not this actually occurred. But one Reddit user claimed to have used generative AI to be able to automatically apply to about 1,000 jobs that met certain search criterias, write up cover letters, and basically do a bunch of tasks, effectively very quickly, and therefore received 50 job interviews. And at first I was like, oh, that seems a bit disingenuous, but I've actually turned on that quite a bit, because most certainly a lot of companies are going to use artificial intelligence to screen candidates out. And if you're good enough at generative AI to use it to apply to jobs and get an interview from that, then that seems absolutely reasonable.
Right. And ultimately, you're going to be judged on. Guilty. No, and ultimately, you're going to be judged on, can you do the work? And if you can't, then here's what's going to end up happening is that company is going to have to adjust its hiring process, and maybe they don't go through this because they get burned by it a bunch, and maybe that goes away. Like, this is how the market, either gives or takes based on, the results that you're getting from these types of things. But yeah, I mean, look, what is, as long as you are not lying and making stuff up, okay, like if I will say, if the generative AI is just making up stuff, problem. But if it's, hey, here's my work experience, generative, and this is stuff that generative AI can do. Here's my resume. Here is the job listing. Transform this resume into something that like captures all of the buzzwords from this job listing so that their AI will pick up on my AI's stuff. Fine. But if you are just using it as, hey, come up with like a fake, resume of, but that's, I don't think that's what we're talking about here. Are we, Mike?
No, that's not what we're describing here. And so, yeah, I'm right there with you. The application for jobs market is, well, it's already changed quite a bit. It's going to continue to do so. And yeah, if you're a company that's just leaving a job post up in perpetuity just to seem like you're growing, then I have a problem with you, but that's probably par for the course now.
Can I make I don't want to call it a prediction, but you want to know what my black swan event is for the next 20 years? Sure. And this is something that I think is unlikely, but at the same time, I wouldn't be surprised if it happens. The internet is going to kill itself.
Going to.
And what I mean by that is we're going to have so much AI slop that's created that we're going to pull back from the internet because we can't tell what's real there or not. And as a result, the internet is going to become useless for us, and we're going to get back to having to actually talk to people because we just don't trust anything that we are seeing on the internet.
Yeah, I hope we do get to the point where we don't trust things that we see on the internet, but and that may be where we're heading. Unfortunately, that's one piece that I see we are not there on. People still trust far too much the internet, more than they should.
Let's take a quick break here. When we come back, we'll talk a little bit about the latest coming out of LA as far as, hey, people there losing their homes. It's where a lot of their wealth is held. How do they move forward in a world in which that wealth is, at least temporarily, not there the way it used to be?
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. The average monthly cost for a private room in New England could double by 2040. So if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. It'll help you understand how to protect your assets and allow you to enjoy your later years. An unexpected nursing home stay could significantly reduce your wealth and prosperity. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. Don't put off today what you might really need to do tomorrow. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
As technology continues to evolve, financial frauds and scams are becoming more regular and pose a serious threat to your finances. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and understanding how to identify these scams can reduce your risk of becoming a victim. Our new guide is called 7 Common Financial Frauds and Scams, where we offer information that may help you become more aware of these issues and allow you to take the necessary precautions to avoid a big problem. From identity theft to Ponzi schemes and ransom attacks, the new guide will focus your attention on practical tips to protect your financial health. Call 800-393-4001 and request your free guide today. That number again is 800-393-4001 and ask for your free copy of 7 Common Financial Frauds and Scams at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Piece in the Wall Street Journal. It's titled, "Their Wealth is in Their Homes are Now Ash." And what this is talking about is, look, I know that no one likes to have sympathy for people in LA for whatever reason. But when you've got, people that have had their homes burned to the ground, I hope that you can find just a little bit of it and maybe not make this into something else. Because you have people, just as an example, who might have bought their homes as, average middle-class people. They might have spent, a few $100,000 20 years ago to go and buy a home. And now that home, by virtue of, being in a state where they do a horrible job of building new homes and, actually having a vibrant real estate market, that home that was purchased for $300,000 is now $1.5 million and burnt to the ground. But the family that lives there hasn't, seen their income go up 5x. It's, they're still a middle-class family, and now they're trying to rebuild. And in a world in which you have all kinds of insurance problems in the state and reports that are coming out about, small local insurers that may be insolvent and not able to pay all claims and things like that, you've got questions from these families as to, hey, we lived here for, 20, 30, 40 years. We don't know if we can afford to rebuild here because we don't actually have the money to do so, and we're not sure we're going to get enough from our insurance claim to be able to cover, what's there as well.
Yeah, look, I think this is a pretty relatable story for anybody on either of the coasts, quite frankly, right? I mean, you talk about the town from which we're broadcasting, right? 50 years ago, very middle-class town where you could afford it as a tradesperson or, in a middle-class job. Today, home prices, are appreciated to levels similar to what you're probably seeing across Los Angeles. And for a lot of people, that was their rainy day fund. It was their nest egg. And, you certainly hope that most of those had insurance coverage. But honestly, that group of people, the people that, did see that type of appreciation and maybe bought it in the 1970s are probably the most likely group to be uninsured at the moment. When you talk about the cost, when you talk about the fact that they might not have a mortgage anymore, that group, that cohort is probably the most likely to have said over the years, hey, I need to cut somewhere. And so either I'm going for a really, really slimmed down insurance package or I'm doing without insurance entirely. You hope that's certainly the minority, but it may exist. Look, ultimately, I think that with a disaster of this size, there will be a fair bit of aid, but you bring up a very reasonable point. These are densely populated areas. It's going to take years to rebuild. And for a lot of folks, it's going to mean an inability to move back to an area that they have, in many cases, raised families in and grown in and have jobs and all sorts of things that are going to be massively disruptive. And look, this is one of the key risks to having a huge portion of wealth in your home is, you by its very nature have a concentration risk that is unlike kind of any other investment out there. Right? When we talk about investing, not that a lot of people were doing this as an investment, it was their residence. But when you talk about having a huge portion of your investable or uninvestable wealth in value of real estate, this is one of those key risks out there that we see and talk about frequently, and hopefully most of it was insured, even if that insurance market looks a lot different in the future.
The calendar is turned and the cold is here to stay, so now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Mike, you see that Chuck E. Cheese is making a bit of a comeback?
No. When did they enter bankruptcy? Was that last year or the year before? I don't recall. But
2020, actually, 5 years ago, believe it or not. I know, time flies. But so they came out, missing $705 million in debt. And the big thing, they have, I guess, their locations that are still around. They've moved more towards things like trampolines and, more active type stuff, and gotten rid of some of the stuff that they used to have. They've also
ball pits.
What's that?
Pea-filled ball pits, you mean?
I'm not going to.
That's kind of what they were known for before.
We're going to take a break now. And, we'll come back and discuss that in hour 2 on the Financial Exchange. We got a lot more, including what we can expect from the Trump administration on tariffs and where earnings season is projected as well. All that and more coming up in a bit.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other, and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour 2 of the Financial Exchange. Chuck, Mike, and Tucker with you. We got mixed trading today. The Dow is up 139 points, so that's fun. The S&P is down 34 points, not quite as fun. The NASDAQ down 256 points, about 1.3%. And so tech largely feeling the bulk of the pain today. In particular, NVIDIA and Apple both down about 2.25% as we speak right now. But Google, Meta, Tesla, Microsoft, all in negative territory as well. And so you've got kind of this funky thing happening, which, again, it's not like crazy. This stuff does happen occasionally. But right now, if you look at the S&P 500, you actually have 46 more issues that are advancing compared to declining, and yet the index is down 0.6% because the big names are getting whacked, and they have such an outsized importance in that index at the moment. So that's what's going on in equity markets. 10-year U.S. Treasury is up 1.6 basis points right now to 4.79%. Oil up another $1.83 a barrel. Sitting at $78.40 on West Texas Intermediate. AAA national average for gas prices, though, falling somehow over the weekend, down 0.2 of a cent to 306 5/10. So even with rising oil prices, gas prices as a whole falling for the nation. And then when we take a look at gold, we've got gold off $31.60 an ounce right now to $26.83 40 cents. Mike, Stephen Miron, who is the chair of the Council of Economic Advisors for incoming President Trump. He's someone who I've followed on social media for, I don't know, probably 5, 6, 7 years at this point. Smart dude, knows his stuff and has kind of an unorthodox approach to the potential for implementing tariffs. Was talking about it as, as long ago, as far back as, at least a year or two from the readings that I did on kind of what he was talking about then. But he's pretty much, and I've said this over and over, he is making a case for implementing widespread, broad-based tariffs as a way to help rectify some of the trade imbalances that have popped up over the last 30, 40 years. What is the case that he makes for them?
Well, before we get there, I do want to make 2 points about this. One, clearly a trusted advisor to Trump. Two, like you mentioned, PhD-trained economist from Harvard University. I'm guessing you can count the number of PhD economists trained at Harvard who believe in tariffs as like a core fundamental good thing for the economy on like one or two hands. It's probably a small minority, but his argument is pretty clear that, you implement tariffs and you use the income to support the development of certain industries and protect certain industries as well. And so he very much, I don't think he's got the blinders on, right? Frequently we talk about people who speak about tariffs and don't really acknowledge the fact that they can be a tax on goods for the American people, that Americans end up paying that in higher prices. And I don't think he has any sort of blinders on that reality when it comes to the use of tariffs. I think his argument is mainly that it's worth it.
And I think he's in a very realistic spot on this. And it kind of shares, I think he shares my view in that I'll quote him here on this. He says, look, there's a path by which these policies can be implemented without material adverse consequences, but it's narrow. And so he's saying, look, this is something where there is risk to this. It's not just, hey, this is going to be all pie in the sky and it'll all be fine and there will be no problems. He's saying, there might be, and most likely are some adverse consequences that occur as a result of this. It's not trying to pretend that nothing bad happens if you implement this, but much more, hey, this is something that he believes is important to try to do. And this is also something where we've heard the president-elect talk about this as well. And I can't stress enough, I've said this over and over for the last 2 months now, that all of the chatter that you are hearing out there from members of the incoming president's team on the economy are talking about doing this stuff very seriously. And it's not to say that it's going to be easy. It's not to say that it's definitely going to work. We don't know. But I think you have to believe them that they are going to try. And if not, like if they get in and they're just like, well, we thought about it and we decided not to, okay, then we can actually have the conversation about what are we doing here. But otherwise, I think that you really need to believe that there's something coming here, because that's what they're telling you. That's what they are, showing you in terms of who they're putting in different positions. And I think that you have to believe that it's something that's going to come to fruition, and we're just going to have to see how it works out based on the implementation and subsequent responses and how it evolves over time. Remember, this isn't just going to be, well, we implemented tariffs on day one and we just let them sit for 4 years. There are going to be responses by other countries. There will be counter responses by the U.S. There will be counters by, the other country. It's going to be a state of evolution throughout the term. And I think that we need to be aware of that. It's not just, well, we did this and now we'll just see how it goes. No, it's going to be changing quite frequently, I think, in terms of companies in other countries. You try to game the system. Okay, can we, in order to get around these tariffs, can we, set up a subsidiary here that can do this? These are the things that every big company is talking about right now, and we're just going to have to see how it plays out. But there is something here that's going to be happening, and I don't think this is just for show.
Chuck, we've talked a little bit about policies from an incoming Trump administration, to us at least, have read as short-term pain for long-term gain. And
yes,
you've heard some of Trump's closest advisors talk about that. Elon Musk had a tweet about it. Is there anything, I guess first, is there anything about Moran's statements or viewpoints that read differently on that to you? Because, again, my sense is that he's going in eyes wide open and acknowledges that it's going to be a challenge.
No, I mean, I think that's very much what he is saying here. And again, just as an example, one of the things he talks about is, look, what happens if another country retaliates against the U.S. with other tariffs? And this is from Moran's own writing. He said that the Trump administration could declare that it views joint defense obligations and the American defense umbrella as less binding or reliable for nations which implement retaliatory tariffs. So basically saying, fine, if you tariff us, then we're not going to necessarily defend you militarily. Now, this gets at a whole host of other questions and potential issues then, as far as, okay, if you're not going to defend us militarily, what kind of economic cooperation do we want? So, again, this is how you kind of have to, play this all out and see how it ends up working here, because you don't know what actually ends up coming out of this in terms of policy. But Moran is going in saying, look, these are things that we are going to potentially consider. Are they going to work? Are they the best solutions? There's so many permutations of where this could go. I have no idea. I have absolutely no idea. But when it does,
we can say definitively, it's very different from the last 50 years of economic policy.
When you see things implemented, then we'll be able to say, okay, here's our baseline, here's how things evolved, and here's what happened. But as to exactly what's going to go down or exactly whether it's going to work or not, I've got no clue. And I'm not afraid to say that. I'm not going to sit here and be like, no, this could never work. I'm also not going to sit here and say, yes, this is definitely going to, and it's going to be great. Wide range of outcomes here. It is going to be, it's going to be a wild ride. And that's, I think, what we have to be prepared for. And we'll see where things go. Let's take a quick break. When we come back, we've got trivia, and then we'll touch on the upcoming earnings season kicking off later this week. What are expectations looking like? We'll fill you in after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
With digital technology continuously evolving, hackers are coming up with incredibly elaborate schemes to commit fraud, which could put your financial well-being at risk. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and in today's landscape, it's critically important that you beware of the potential dangers that exist. Our new guide is called 7 Common Financial Frauds and Scams, and its purpose is to help you understand what steps you can take to avoid becoming a victim. Whether it's identity theft, inheritance scams, or Ponzi schemes, this guide can educate you about these risks, giving you the chance to make any necessary changes to your overall financial strategy. Call us today at 800-393-4001 and request our new guide called 7 Common Financial Frauds and Scams. That number once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
All right, let's do a little bit of trivia here on the Financial Exchange. Well, today is Julia Louis-Dreyfus's 64th birthday. Louis-Dreyfus is renowned as the actress who has won the most awards in American television history, holding the record for most primetime Emmy and Screen Actors Guild awards. Trivia question today: which show helped earn Julia Louis-Dreyfus more Emmy awards, Seinfeld or Veep? Once again, which show helped earn Julia Louis-Dreyfus more Emmy awards, Seinfeld or Veep? Be the fifth person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt. Once again, be the fifth correct response to text us at 617-362-1385 will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, if we take a look at the upcoming earnings season, which, by the way, kicks off pretty much like later this week, a lot of the banks start to report. We got JP Morgan and Wells Fargo on Wednesday, Bank of America, Morgan Stanley, PNC, and U.S. Bancorp on Thursday, so you're kind of getting right into it. The next couple weeks after that is when you start to get the heavy hitters. So last week in January and then first two in February are really the core of the earnings season. But in terms of the projections, in terms of what's expected right now, for Q4 of last year, and this is according to FactSet Earnings Insight, the estimated earnings growth rate for the S&P 500 is 11.7%. If it comes in at that number, it's going to be the fastest year-over-year growth rate since Q4 of 2021. So, quick clip. The long-term historical average, just in case anyone is wondering, is right around 7%. I don't know exactly where it's like plus or minus, a 0.25% or something. But 7% is kind of the long-term, like 70, 80-year trend in earnings growth. So you're expecting 11.7%. Of companies that have talked about their Q4 earnings beforehand, 71 have issued negative EPS guidance, 35 have issued positive EPS guidance. So it is something where you've had some companies coming out and saying, yeah, this is going to be a little bit worse than, maybe we expected here. But overall, the other thing is that earnings expectations, I know this is not for this quarter, but for calendar year of 25, analysts, and this is again from FactSet Earnings Insight, analysts are projecting earnings growth of 14.8%, and for calendar year 26, 13.6%. So you're talking the growth that is projected the next 2 years is extremely, extremely high, and I think the only question that matters for the stock market is, can it deliver those? Because if it can, then it's going to be just fine. Like, yeah, you'll have hiccups in this and that, but it'll be fine. If it can't, then you got some real dodginess here, because you got a stock market that's priced expensively still, and so earnings and being able to deliver them is huge right now in a market that is priced this expensively with those kinds of projections baked in.
So, as you pointed out, these are well above long-term trend and will be certainly difficult to deliver on. In addition, there's this fun game we play where earnings expectations for the long term are always higher than they end up being when we get closer. I know for Q4, back in September, we were expecting 14.5% earnings growth. Now it's down to, what do you say, below 12?
Yes.
So there is that fun game we play, so it probably won't live up to those expectations. If you're going to take the positive outlook on this, look, consumers are still clearly out there spending. It was a good holiday shopping season. Unemployment once again dipped a little bit lower. And the big, loud complaints that I had heard about inflation and prices and a real backlash against retail over the last few years is still continuing, but not in the same way that I think we saw it in, say, 22 and 2023. On the big picture side of some of the largest companies out there, I don't see any signs of slowdown in demand for semiconductors. There's certainly a slowdown.
You had a story this morning,
but say again.
You had a story this morning. It's a report that was out that some customers are starting to pull back on NVIDIA orders. So that was floating around this morning. I don't know if there's any, there was very little detail in it in terms of, exactly what was going on there. But it was something where, again, it wasn't even NVIDIA orders specifically. This is from Reuters. NVIDIA's top customers are delaying orders of the AI chip leader's latest Blackwell racks due to overheating issues. So not necessarily a demand thing, but maybe a performance thing. And so that's part of the reason why NVIDIA has been down today in trading. But aside
and the counterpoint to what I just said, too, I mean, the Biden administration in its last few days here just issued a whole bunch of new curbs on the latest AI chips and basically carved out exemptions for 18 of our closest allies, but for pretty much every other country out there, put in this new series of rules when it comes to developing AI data centers and the chips that they would need to power them. So, yeah, again, I don't think we honestly know. I don't think anybody honestly knows what the Trump administration's approach is going to be to these same sectors.
And so, look, this has been something where this is kind of the weird stuff that you might see this year. Like, this is something that's a possibility. Is, hey, the market leadership for the last couple of years, absent a brief period in the second half of last year, has been tech stocks, specifically like AI and semiconductor. And so you have this thing. If you look at what's going on today, the S&P 500 is down a little over 0.5%, 0.54% right now. If you look at the equal weighted S&P 500 at this very moment right now, today it is actually up 0.25%.
Can you explain what that is?
Yes. So
that's probably a foreign concept to some.
Here's the premise. The S&P 500 is what we call a market cap weighted index, which means that NVIDIA, which has a market cap of like $3 trillion, makes up a whole lot more than, let's see, what's the smallest one I can find here just looking at it? Alliant Energy Corp, okay, which is, let's see how big they are. They are a $14 billion company. There's way more NVIDIA in the S&P 500 than Alliant just because they are bigger by market cap. But what you can also do if you want is you can say, look, I don't want to look at, the S&P 500 by market capitalization. Just give each company 1/500th of a weighting and show me what the index does. And if you do that today, where your big companies like NVIDIA and Apple and Meta are down so much, if you look at it on an equal weighted basis where each one is just 1/500th of the index instead of, market cap weighted, the S&P 500 today would actually be up about 0.25% right now. And so this could be one of the paths that you potentially end up taking this year where you say, look, the things that have done well for you in the last couple of years, they're going to struggle, and so the index as a whole may struggle. But some of the other stuff that may have lagged the last couple of years, maybe that's finally like management's gotten its act together and they start doing a little bit better. And so you might have something where, hey, last year it was one of the worst years ever for S&P 500 components to actually beat the index. I think it was fewer than 20% of components actually beat the index because it was, again, just a handful of stocks that in the first half of last year really drove performance. This year, what if you end up seeing the opposite? I'm not saying you will, but what if you say, look, what if 80% of S&P 500 components beat the index this year, but the index gets dragged down? So you see like S&P down like 5% this year, but the average S&P stock is up 3%. Like what if that's a possibility? I'm just putting it out there. I'm not saying it will happen, but this is what's happening today is that kind of path actually. Quick break here. When we come back, we got the trivia answer. And then we are going to be talking something that Mike sent me that I can't remember after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hi, it's Chuck and Mike from the Armstrong Advisory Group. Our guide this month is the 7 common financial frauds and scams. Mike, one of the ways that fraudsters potentially get your information is through something called a phishing, with a PH, scam. What is a phishing scam?
Yeah, again, a misconception here from a lot of folks. When they think about getting hacked, it's, some cyber criminal that's gaining access through a back door to your information. Usually that's not what happens to companies or individuals. It's usually I fell victim to something that looked legitimate. And so a phishing scam would be when someone posing as somebody else, FedEx or the United States Postal Service is a common one. They send you a text or an email saying, you missed your package delivery, sign in here to get access to it. And you end up actually giving the fraudster your own personal information.
In terms of being vigilant against this, how do people start to protect themselves?
Quite honestly, it's so prevalent these days that my general feeling is that you have to treat every phone call, every text message, every email you receive on a day-to-day basis as though it is a phishing attempt. And until you're able to prove otherwise by calling that person at their known address, by looking up your bank's contact information rather than trusting that it's actually somebody from that bank, you have to assume that it is a fraudster, it is a scammer trying to get access to your information, and be vigilant and suspicious.
Our guide is titled The 7 Common Financial Frauds and Scams, and it details phishing scams and a host of other ones. You can request it by calling 800-393-4001. The guide has information to help you make more informed decisions to protect yourself and can be requested by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Hey, trivia question today was, which show helped earn Julia Louis-Dreyfus more Emmy Awards? Was it Seinfeld or Veep? The answer is Veep. Julia Louis-Dreyfus won 1 Emmy Award for her role on Seinfeld, and she won 6 Emmys for her role as Selena Meyer on Veep. Winner today of the Financial Exchange Show t-shirt was Lou from Warwick, Rhode Island. Congrats to Lou, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, piece here in Bloomberg Opinion titled Private Equity Does Not Belong in Your 401k. We talked briefly last week about what was being lobbied for. What exactly is being talked about, and what does this piece say about it?
Yeah, so I mean, the piece does acknowledge, like, hey, there are some reasons that it could make sense. And for those unfamiliar, some of the problems with private equity for retail investors is that they're generally illiquid. You put money in there, there's not a lot of disclosure around how the funds are invested. There can be high fees that are somewhat difficult for the average person to interpret how they work, and you have a long hold period without a lot of liquidity like you would get from the average stock. The point that's made, in favor of this is, well, look, that kind of fits a young 401k investor fairly well, right? If you are 30 years old and contributing to your 401k, liquidity is probably not your top concern. Rather, it's long-term investment return. The conclusion that the author comes to, however, is, look, actually, no, I'm not even going to conclude him. Chuck, what would you say, other than, just going with the default option of a target fund in someone's 401k, what would you define as the most common method that you see and talk to people about selecting investments in their 401k? Because I don't know if you see the same thing I do on this.
You ask people, hey, how'd you pick what you had? I looked through the list. This one had the highest return, so I picked that.
Yep. Yeah, exactly. And that's in spite of the fact that every single disclosure that you have ever received about any investment ever is that past performance is not indicative of future results. And yet, I would agree with you, that is by far the most common method of selecting investments in a 401k plan. And so, quite frankly, I think the conclusion that the author comes to is, look, these are really highly complex products that are quite sophisticated, and the average 401k investor invests just the way that Chuck and I described, and that could be a huge downfall or pitfall for the average person out there. I do think personally that the restrictions on who can invest in this type of thing are maybe a bit overburdensome. And there's some arbitrary dollar amounts that people have to have in order to invest. But just blanket saying, hey, this is appropriate for most 401k holders, it seems like the wrong direction on this one.
Yeah, I think here's something that I think I would look at. Mike, if someone is working in the financial industry, and let's say that they're working in the financial industry as a financial advisor. If they want to go and sell product X, Y, or Z, they typically have to take some kind of course of study or this and that in order to be able to sell it to other people, which is totally reasonable. Like you don't want people that are uneducated about what they are selling. I guess my question is, look, ultimately, if we're deciding that financial advisors should have to know something about what they are, selling that is listed as a security. Hey, if rather than just being like, no, you can only buy this if you have, XYZ dollars. Okay, here's like the 2-hour educational course on this product, or the 6-hour, however long fine, whoever wants to, as long as you can pass, as long as you read through this and pass whatever the baseline exam is, 10 questions, you got to get at least 7. Fine, go buy it. I don't care if you have $1, $5, and the firms can set their own minimums just as they do today. So, it's not going to be like, let's be honest, Blackstone Group doesn't want your $10 investment.
No.
It's not
that
because
you're going to contribute on a biweekly basis.
Right. It's not because they don't like you. It's just they don't want to deal with that. Like, they're just not interested in dealing with that. So I'm very much of the opinion, look, I don't have a problem. If someone wants to own private equity inside their 401k, fine, but because the risks are so much different and so much greater than the investments that are currently in there, fine, make them learn something about it first. I'm not saying for all investors anywhere. I'm saying if you want to buy this stuff in your 401k, which, remember, the 401k and its creation through ERISA, it's kind of a very special vehicle in terms of what it allows you to actually do. And so, yeah, if private equity wants to get into 401ks, then the people that are going to buy it inside there should have to do some basic due diligence on what they're buying and prove that they've done it, in my opinion. And then, whether you have $1, $10, $1 million, however much it is, fine, have at it. I don't have any problem with that. But yeah, I do kind of have a problem with, hey, let's just unload this on the retail masses who just look at, what the performance is and they won't notice. Well, yeah, that doesn't feel great to me.
Yeah. If you are, on a show of hands here, if you are in that bucket that I just spoke of, which just said, I think is the most common way of selecting investments in general, is purely just looking at the previous returns and saying, oh, yep, I like that one because look how well it did. Honestly, think about that, because one of the first things that Chuck and I have talked about when it comes to investing is understand what it is that you own. And if you can honestly look at your own portfolio and say, yeah, I understand what it is that I own and how that needs to adjust as my personal situation change, then I'm here to tell you, you are way ahead of the curve. That is an excellent first step of saying, yeah, I have a general understanding of my asset allocation and how that needs to adjust with my long-term outlook on things. If you're falling into that first bucket, though, of saying, yeah, I kind of blindly selected, or I just let my employer do it for me, and I don't really understand how it works or what the difference is between the traditional versus the Roth contributions, or how my employer match truly functions, or how this new rule on catch-up contributions might affect me as a 60-year-old, I beg you to please call the experts at Armstrong Advisory Group and let us walk you through how that 401k, how that retirement plan, or that bucket of money that you have to invest is going to work with your personal financial strategy, because I can guarantee you that you and your coworker don't look exactly alike in every single way. Give the folks at Armstrong Advisory Group a call. We offer free consultations throughout New England. The number is 800-393-4001. Again, that's the Armstrong Advisory Group at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, I'm here for the billionaires taking on other billionaires, so I want to talk a little bit about some Zuck here. So the Zuck went on Joe Rogan's podcast and talked about a whole bunch of different things. Spent some time beating up on Apple pretty good. I'll quote here. On one hand, the iPhone has been great because now pretty much everyone in the world has a phone, and that's kind of what enables pretty amazing things. But on the other hand, they've used their platform to put in place a lot of rules I think feel arbitrary, and they haven't really invented anything great in a while. It's like Steve Jobs invented the iPhone, and now they're just kind of sitting on it 20 years later. So, them's fighting words, at least for, tech billionaires. And couple things here. First, what exactly has Meta invented?
I was going there too. I will say that I think Meta has perhaps innovated more over the recent years than Apple. But if we just get into the business of rewarding in innovation that nobody uses, then that seems kind of silly. They've invaded and poured tons of money into the metaverse, which very few others are doing. They have
put that innovative?
A ton of money into virtual reality. I think it's somewhat innovative, but guess what? Nobody bought it, so I don't think you have any right to be knocking other companies for their failure to innovate when you did and nobody actually bought it.
It comes off as a little bit of sour grapes, but what it does get at, I want to read this other quote here. He says, they build stuff like AirPods, which are cool, but they've just thoroughly hamstrung the ability for anyone else to build on the platform that they're on. And this is really where
that's intentional, Mark.
Well, but here's the other thing. This is why Meta is building the metaverse. It's not because they want you to be like in this virtual world. It's because they want to own the hardware through which you connect to it, because here's the secret that Zuck didn't tell you on this. Here's the secret. I'm going to whisper it, so listen close. Zuck wants to do what Apple's doing. Like that's what he's so upset about here is he's looking at this saying, Apple's taking a 30% cut of my revenue just because I have to sell through their store because I'm on their hardware. I don't want to do that. I want to take 30% of everyone else's revenue on my hardware. And that's why they want you to be in their VR goggles and stuff like that. It's not because Zuck is this big believer in VR. If you gave Zuck 43 beers and said, hey, do you believe in VR or not? He'd be like, no, I don't care about VR. I just want people to be on my hardware so I don't have to pay Apple. That's the truth of the matter. This is why he doesn't like them. It's not that he has something against what Apple's doing. It's that he wants to be Apple.
And, just objectively here, just taking a step back, do we think the metaverse and Facebook's VR stuff is fundamentally more innovative than AirPods, whatever Apple's doing in the TV space, their watch, and their health stuff?
Well, I don't want to get into a competition on who's more innovative.
That's my point. Zuck, I don't know that you have much of a leg to stand on.
But even if how do you measure who's more innovative?
Right.
What does that even mean? It's especially in the context of consumer-facing technology, where all that we care about is does it work and can I text my friends and send pictures of cats and stuff. So, anyways, I thought this was really funny because to me, when I boiled it down, it was Zuck's just upset that he's not in Apple's position. He wants that seat. It's not that he doesn't care about any of this stuff from a moral or ethical standpoint. It's just no, he wants that 30% that Apple can charge, and he's not getting it right now, and he can't. And they can't get the advertising data because Apple walled that off. That's the other piece. Quick break here. When we come back, we got Stack Roulette after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. An extended nursing home stay could deplete your savings in months if you're not prepared. Learn about the steps you need to take to protect your assets from these high costs. Get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. Call 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visit usvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visit usvi.com and use code VIBE2025 to book your trip. That's visit usvi.com and code VIBE2025.
Mike, what do you got for me for Stack Roulette?
2023 was the first year that it's been tracked where bourbon sales were on the decline, showing a downward trend of purchases of bourbon by about 1.2% in 2023. It's estimated that volumes turned down 4% in the first 9 months of 2024, so we'll see where that ends the year for. Similar trend has been going on with wine sales across the world, and maybe for a little bit longer than bourbon, because bourbon was having a bit of a resurge over the last few years, but it just reminds me of how rapidly the beverage market changes. You know, just a few years ago, we were talking about hard seltzers eating up beer volumes. Now we're talking about non-alcoholic beverages and microdosed beverages taking up some of the alcohol space. And it is it's a dangerous market to play in. Certainly the big names that are backed by huge brands will be out there for a while, but even small declines like this will hurt small producers of bourbon most certainly. And as I've said before with wine, sounds good. More out there for the rest of us.
What do you make of this? Is this something that's new? I mean, look, I'm not that old, but I guess it strikes me that I'm not really sure how much innovation there was in alcoholic beverages over, I don't know, maybe like the last 150 years. You know, like you made beer, you made bourbon, you made, whatever. And now it feels like every year or two there's some new fad, and not just like a new fad, but like, again, an entirely new category that's being created. Like these hard seltzers or, what'd you say, like microdose drinks or whatever the heck it is?
Yeah, that's the new thing that I see out there is like microdosed cannabis drinks.
So I guess my question is to older drinkers, has it always been like this?
This volatile? Yeah, I mean, I was talking to Jim today, Polito, who was saying, back in his bartending days, he noticed that, the trends would just shift wildly and rapidly when, I think one of his earlier jobs out there was bartending. But it does feel to me like, but maybe the honest answer is that, what people were drinking always shifted, and now it's just new brands pop up every few weeks because it is easier to create an entire beverage company today than it was 50 years ago. I'm not entirely sure.
JP Morgan, what the heck is that? JP Morgan Chase. They shut down comments on an internal webpage that was announcing the bank's return to office policy after a bunch of employees criticized the move on that webpage, and at least one suggested that affected employees should unionize. And so, it feels like that last one might have this in the crosshairs of the NLRB, just because you're not really allowed to do that if there's like a serious unionization talk going on. And again, online, it's how do you tell what's like serious versus not? But I'll just quote here. Many employees shared concerns such as increased commuting costs, childcare challenges, and the impact on work-life balance. One person suggested they should consider unionizing to fight for a hybrid work schedule. People familiar with the matter said, and soon after the bank disabled the comments. This is what J.P. Morgan Chase wants. They want you to leave. I am more convinced than ever that companies right now are using return to office so they don't have to lay people off and pay severance. And
I would agree.
I'm not saying like
they don't want you to unionize, though. I wasn't sure what you were talking about there.
No.
Yes, they do want you to leave.
They would prefer that you don't unionize, but they want people to leave. They're trying to reduce headcount, and it's cheaper for them to do it through voluntary departures as opposed to having to lay people off. And I am more convinced of that than ever, given what we are seeing out there. So I think
the recent example was Amazon calling all their workers back, and then, to your point, they didn't have enough office space for it, which can only be read as we thought more people would quit.
Right. So I suspect that's what's going on, but in a more stagnant labor market, again, the quits rate keeps dropping. People are not quitting. I'm wondering, third quarter of this year, do we start seeing layoff announcements pop up? Just a question. Let's take a quick break for the whole rest of the day. We'll see you tomorrow on the Financial Exchange.